Over to you, Dr. Rai Chaudhary.
Thank you, Shubhajit. And this session is actually on, as you know, we have today Dr. Sachin Chaturvedi, who has very kindly agreed to come here from Delhi. He's the Director General of this think tank RIS, which is a Department of Government of India, Department of Commerce attached institute, if we can say so. And what I will do, in fact, Sachin also has, is in a hurry to catch flights after this session. So, in fact, he is being an economist. We have heard a lot from the manufacturing and the e-commerce and this sector. And what we will do today, let's take it a little bit away from the production side or producers or firms to economists. And people are scared of economists because we talk too much, but we don't have time for talking too much. So I hope we'll be able to finish it within time. And let me just briefly say we are in a situation which is not good at all for the world economy. As you can see, that the US is leading a war on interest rate now, just to tame their inflation. They are facing something which they call stagflationary situation. In fact, the economy is stagnating, but inflation is hurting most of the common people there. And when US Fed raises their interest, rest of the big central banks all over the world follow suit. India is no exception, because if we have to survive in this world, we have heard about this foreign investment, foreign inflow. India is a preferred destination, as the minister, Mr. Goyal, just said. So if that is to be true, we cannot just simply keep our interest rate fixed. We'll be nowhere in that situation. So there are issues like this, global recession, where we are heading to. Then we have problems, as our minister just said in the beginning, and also this was touched upon by the earlier panel. We have a golden opportunity to grab a portion of global supply chain, which is distorted, disrupted, and mainly due to, some kind of a tough policy in China. China controls 24% of parts and component supply of the world. And putting so much in one basket, the world is facing it now. And we have an opportunity in that situation. And India late, we didn't care for this. For a long period, we ignored the global supply chain altogether, taking too much dependence on domestic policies. The PLI scheme has come, in whatever name you call it, but the main idea is to grab a chunk of this global supply chain now. It may be late. And now we have other things. I will go one by one. So let me just ask Sachin on these 2 points which I just raised. What's your take on this? One is the global recession, the challenge, Fed raising interest rate, all the central banks have a competitive scenario now on this, and the parts and component, global supply chain and all these issues. Thank you.
Thanks, Sajita Uda. At the outset, I must thank the Bengal Chambers for giving me this opportunity of connecting, and also having this opportunity of hearing the industry, and the panel was excellent. I think all the brilliant minds were there. It was absolutely fascinating to hear them. I fully agree with you in terms of the global volatility that we are seeing, and what we heard at Jackson Hole, the Fed's statement that came out in terms of the volatility that it has infused in the global monetary scenario, the banks following. I think there is a sort of race now on among central banks to rush for raising the interest rate. As we are also hearing, the Director General of WTO already announced recession, and until few weeks back, inflation was bothering the world, and is still, I think, most of the central banks are bothered about that. But definitely, Ajita Buddha, as you would agree, the idea of monetary policy coming out of the accommodative phase to more of the tightening of policy. I think that is the first point that I want to make, and that phase is absolutely clear. Yesterday already the MPC has started its meeting. Tomorrow would be the conclusion. And I think it is being guessed in media in terms of how it would go, what would happen, etc. But I think both the Reserve Bank of India, but also the Finance Minister herself, they have made it clear in terms of we getting into a phase which has lot of uncertainty. And that uncertainty, I think, is emanating out of the large challenges we are having, be that the COVID fallout, the war, as was mentioned in the first panel. So those, I think, issues are absolutely there, and we need to take them right heads on in terms of the challenges. In the month of August itself, India got something like $7.6 billion portfolio investment, which itself was 16 times more than what we received in July. So you can imagine the that uncertainty. You can imagine the liquidity flow that is coming in, and as you might have noticed, in last 4 months, 7 pension fund offices are being opened in India. So you are finding a sort of traction that is coming in to pump in global liquidity in the Indian market. And that, I think, is largely in terms of how we are looking at the challenges. In the first panel, we also heard this sort of endeavor, largely in context of MSME, but also, I think, important in terms of softening of the supply chain. And that, I think, is important in terms of how it is going. Coming back on the point of uncertainty, I think we also need to realize that the Fed and the Fed's action in this financial year itself, United States currency through the Fed's action, it has gone 11.8% higher in this fiscal year. Our currency, the INR, has depreciated only 5.1%. So this is part of that larger disconnect that we are seeing in terms of our decision making, and that, I think, is something which FRBM addresses adequately with the flexible inflation targeting, and that 2 plus 2 minus, I think, gives us the remit within which we are able to contain inflation and still get on to the growth story. In my tenure as on the board of governors of the Reserve Bank, and Mr. Mitra is right here. Both of us served on the Eastern Area board here in Kolkata. I think it is pertinent here for us to see, and now that industry is sitting, both of us used to see how much little is being sort of contributed in terms of the credit that the local industry should be getting. So the point here of this uncertainty, the supply chain disruption, is in terms of the role that we see for industry to contribute. And I would come back to this question a little later in terms of how I see Bengal's industry and in what way we look forward in terms of managing. But definitely, I think, Aditya, the important point here is also in terms of how RBI has handled the situation. Our ability to provide forward guidance that is needed, the amount of hand-holding that is needed in terms of both monetary and non-monetary, financial and non-financial hand-holding in terms of communication that is needed, I think is extremely important. Tomorrow we would come to know what new positioning in terms of rate of interest hike that we are going on with. But definitely in uncertain times, important would be for India to focus on manufacturing with enhanced efficiency and contributing in the manner so that supply chains, be that for the large industry or MSME, and within MSME also the volatility that the most vulnerable section of the industry, the micro, they are facing. And they have gone through the largest closures in last 3 years. So that I think is absolutely important for us.
Well, important points, in fact, in which direction the RBI should move. I mean, it's not an independent entity, obviously, in the global scenario. They have to think about what the other central banks are doing. So that's important, and, hopeful comments from Sachin is important. Now, just one comment about the MSME. We talked about the MSME, and all of us agree that the government cannot pull the MSME sector all the time. They can help the startups, etc., but the large-scale industry has to have a symbiotic relation. In fact, historically, if you look at it, the putting out system of the British was the first way they promoted the small-scale sector in Britain. And that is not only credit, this technology. That's how it was promoted in the industrial world. That's how it is promoted in Southeast Asia too. Think about Thailand or Vietnam. How did they do it? And we couldn't do it. And we are lagging somewhat, and MSME sector is having problems of technology upgradation, not only credit. It's not that they are only suffering from credit, they are suffering from backward technology and so on. I'm not touching upon that anymore. A lot of talk last time, the last panel too. Let me go to the other point. The regional groupings are very important nowadays. If you think about that, USA has created this new grouping in two parts of the world. One is the Middle East, the other is the Southeast Asia and Pacific. And it's geographical groupings, strategic groupings. We can have other groupings within South Asia regions. That's very important, how the regional groupings will play in future. So what's your take on this? I mean, are you hopeful that the regional groupings where India is taken will have some good future prospect for us?
Definitely, Aditya, as it is emerging, I think value chains and we becoming part of those value chains are going to be extremely important. And sitting in Kolkata, I think the gateway for our Act East policy, we very often say, but I think the action is missing, and that's what we need to identify with enhanced connectivity with Bangladesh. What is it that we can do? And as you are aware, with IRIA and Asian Development Bank, my institute, RIS, has just finished a study on trilateral highway. And this trilateral highway is in terms of getting our road connectivity from Thailand, Myanmar to India, and with Laos and Cambodia being there, what kind of that connectivity we can bring in. So this is one which is already coming in. It is very much on the radar, it's very much on the ground. How we leverage our production and in what way we connect with these economies, I think is extremely important. The second part, as Prime Minister announced this summer, is in terms of I2, U2. So there, with India and Israel and UAE and the United States, we have announced food chains to come in. This is also part of the BIMSTEC network where Prime Minister announced setting up of food chains. And I requested our local RBI office to get me the data on food production and food chains in Bengal. And I think it is pertinent on our part to see how units other than ITC or ITC's own leadership in terms of creating these value chains, I think is going to be extremely important. The point that the previous session very rightly raised more in terms of big companies playing that role, and I think it's much more important in case of agriculture. I think the connect, and you very rightly, I think, observed while closing the first round of our discussion, in terms of our connect with the academic institutions. And this is where I think Bengal would have to work very hard. if you look at the rise of the IT sector in Bengal, in Bangalore, you find huge role of Indian Institute of Science, you find a huge role of the IT academic ecosystem that came up. In Bengal, I think some of these academic linkages, though with extremely brilliant minds, they are missing. And I think on agriculture front, with the value chains that we are going to face competition from Thailand, because the moment you step in agriculture, you have huge competition from Thailand. The one village, one product scheme of Thailand has created almost 78 products that are coming out from villages. What India has now introduced in terms of one district, one product scheme, Thailand practiced it and created 72 leaders. Now we are gifting honey, as we saw in the previous session. But I think this is important for us to have local recognition of products and their market. So that I think is important and probably equally important in terms of how we look at the question. And there I think I would very much like to bring in this statistics that we collected on West Bengal's exports, which are extremely important in the 2008 to 2021. That period, my team culled out the data, and we are seeing this expansion. So in 2008, Bengal's export was only at $2.6 billion, which in 2022 stands at $6.8 billion. So this jump that you are seeing is largely coming out from the big units. They are not coming out from MSME. And that's where the lopsided trade structure of West Bengal comes up. And that's where we need to work on. So largely the issues here are both the connect for technology for small and medium enterprises, their ability to have product value chains. And as I said, with our Act East policy, missing out on action, particularly from eastern area, we need to bring in the necessary gravitas that is needed in terms of pitching in with the value chains that are needed.
Well, let me go to somewhat a related question. We often, and this has come out in the press also, that our duty structure, the tariff structure, the way we have, if you look at the duty structure of our products, it's not only always inverted duty structure, but there is the duty structure which is questioned. That if we want to promote the manufacturing industries, we have to depend on imported components as well. And if we have to be a leader in industrial exports and manufacturing export, this tariff structure has to be carefully modeled. What's your take on this?
Any economist, I think, any student of foreign trade would not differ much. But I think it is also important for us to see that our industry with PLI now is on a trajectory where we are witnessing a huge manufacturing deficit in this country. The amount of contribution that one would have expected from manufacturing hasn't happened. Largely because we took Washington consensus very seriously. And survival of fittest, those who are inefficient should go out of the market. This philosophy from 1991 onwards motivated the way we structured our economic reforms process. And Paul Sweezy and many other economists have been raising, including Danny Rodrigues and all other structural economists. So as you are aware, the Monetarist School of Chicago and Structuralist School, these two schools in economics profession have been debating this question of survival of fittest. So what Mandel gave us is in terms of World Bank and IMF-led philosophy of companies to perish if they are not competent enough to survive. But we need to see what sequencing is needed in terms of our economic reforms. And somehow from 91 onwards, we took up a process where only the fittest to survive was our idea. And as a result, as part of our transition from GATT to WTO in 95, we agreed to bring down all our quantitative restrictions. We agreed to bring down the tariff structure, which we did. And in fact, if you recall, even 2016 speech of the finance minister promised that we would have tariff structures at par with ASEAN countries. That has not happened. In fact, tariffs have gone up. And I think the sectors where tariffs are high, it is also our a sort of onerous task and duty to see that industry accumulates strength to compete quickly. But if we see that endless high tariff are going to continue, that should not continue. We should have also the sunset clause for tariff to be managed, and that I think would be extremely important for us to realize. With 15 or 14 sectors that we have identified for our PLI scheme, I think we should have sunset clause for the tariffs which are very high for those sectors, because that has bring in this spirit of protectionism, and that's where the inefficiency is coming in. But industry also has to survive. Industry also has to accumulate strength, and that's where all the three things are to be done. Technology has to be strengthened. The low cost of our transactions, the banking support has to be done. And third is in terms of infrastructure. If you look at factory to port, the cost of movement in China is $2.50. In Thailand, it is $4.60. For India, it is $9.45. So this study, this data is absolutely clear. As Minister in his opening remarks very rightly mentioned, the logistics policy is bringing in that solution we are looking at. And then he listed 4 other areas. I'm not getting into details of that. But that, I think, are important. And the message that the long period for continued high tariffs would not be there is something that we should be very clear about.
Well, I guess we are coming towards end. I am told by the organizers to finish it by 12:40 if possible. Obviously, there is this whole issue which has come up, the SDG, Sustainable Development Goals. But if I get into that, that will be a long discussion, because sustainable development, as in the last panel also it came up, sustainability in terms of only environment is not the thing. You have to be sustainable in terms of inequity, in terms of technology, in terms of the spread of industries among the different kinds of industries which cater to the high end and the low end, etc. So let me not get into that, because this is already discussed. Right now we are looking at a scenario where for reasons most of us know, that the rupee is plunging against dollar. And we are looking at something like 82 plus, maybe soon. And you are in the Reserve Bank governing board, and you interact with the Monetary Policy Committee too. What kind of policy maybe the Reserve Bank can take or should take? Should they intervene and get the rupee somewhat stabilized at a level which may be, say, 79 or 80? In Britain, they didn't. In UK, we see that pound is getting close to 1:1. And Raghuram Rajan has written very clearly that Reserve Bank should not. They should allow the rupee to go up as much as possible. We have foreign exchange reserves going down too. What's your take on this?
Thanks, Ajitabuda. As you advised, I'm not getting into the SDG context that you set of discussion, but certainly I would like to re-emphasize the point, and with your close engagement with this chamber, I think it is pertinent to, for me also to bring out the point that you please help us consolidate the perspectives from the industry here. as we go for consultations for various FTAs and the negotiations that are there on SDGs, particularly in context of the green finance, the way we are looking at and the transition of the industry, how you look at some inputs if we can get from the industry, that would be excellent. So with that, I would stop on that point. The second point I think is important, and in the beginning I did mention in terms of how RBI has positioned itself. I'm not speaking for RBI, but certainly I would like to point out three things that are important with the plunging of rupee that you mentioned. Number one is that if you see data for all currencies of the world, all leading emerging market economies and all the developed countries, you would find that all currencies have gone through a very rough patch, including USD itself. And as I said, 11.8% sort of challenge they have gone through, the percentage variation. And this, I think, is something which is there with Canadian dollar. It is there with the yen. It is there with the pound sterling. And we are realizing that 21 other currencies are also affected. So that's point number one. Point number two, with the FRBM, which I acknowledged in the beginning, the flexi maneuvering space that we have for our inflation management, we have succeeded in terms of keeping India's inflation at one of the lowest in the emerging markets. And this is something extremely creditworthy for our system to manage. And this is largely because Finance Ministry and Reserve Bank both have worked very closely together. So as a result, very high inflation we have avoided. World now is grappling with the question of recession. Fortunately, Indian market is on rise, and we heard the industry leaders sitting here, but we also heard the minister. So that, I think, point is absolutely clear. The currency, as far as they in context of inflation, the point here, I think, would be the decision that RBI has taken to leave it on the market forces. Perfectly fine. As you might have seen, last week, 2 attempts were made by RBI to pump in dollar and see with high foreign exchange reserve, what is it that we can manage. We have already pumped out dollars in the market. Twice, 2 operations have already been done in last 15 days. So that, I think, is already happening. There is no limit specific in the minds of people who are managing the currency. Is also very clear. They have said that even if it goes beyond 80, we are not going to intervene. What we are going to do, only 3 things which I was mentioning. Number one, wherever USD is to be provided in the market would be done. Second, no artificial management of it. Number 3, from the trade perspective, though the imports are becoming far more challenging, the whole our petroleum bill is multiplying many times. The government is not going to intervene, or the RBI is not going to intervene. So these 3 points, I think, are absolutely clear. The expectation now is that in next few days, this would already start coming down, as we are seeing the commodity prices have softened, the pension fund inflows have enhanced, so more dollars are coming in. This week, again, we are expecting a huge report from RBI in terms of what portfolio investments are. So these factors where dollars are coming in a major way in Indian economy, I'm sure would help us restore the volatility that Jackson Hole has brought in. The idea of Fed's challenges are also huge, and I think US economy is going through a rough patch. Probably this is also, Ajitabuddha, as you would agree, is a time when USD in terms of the leader of the global currency market is also going through a change. And this, I think, parallel efforts by Indian government to expand the influence zone for Indian rupee is happening with digital currency and with huge interest that we have in fintech and other areas of intervention, they would also help us stabilize INR in a major way.
Well, I think we cannot entertain questions really. If I open it, it's Pandora's box will be there. And we are really, Mr. Chatterjee, if you ask a question, I know it will be a long one. So, I mean, you can talk to him maybe later on, because do you want one or two questions, or do you, you have talked a lot. And, do you have any last word to say?
I do not know. I just wanted to thank the organizers for this opportunity, and I think the idea of holding the conclave with focus on our Act East and our Market Connect, I think they are extremely important areas, and you being associated with this, I'm sure would bring in the necessary heft that is needed in our discussion. So I just wanted to thank everyone. Thank you.
Thank you, Professor Chaturvedi. And let's come to an end for this session. Thank you again, Professor Chaturvedi, for your contribution.
Thank you, sirs. Would request you to kindly stay on the dais. Would request President-designate Mr. Shubhit Chakraborty to please come up on the dais and hand over the mementos to Dr. Chaturvedi first. And to Professor Roy Chaudhary. Thank you so much. That was an erudite panel, as expected. We quickly now move on to the next panel. This session 3, Scripting India Growth Story for Global Play. We already have virtually Mr. K.V. Kamath,